Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. We can hardly wait to introduce ourselves after a long gap, probably 10-11 days. We are seeing the markets in such a cheerful mood, 2% higher on practically all indices. Probably this is a short covering bounce, but probably this is the start of some long-term buying, given that you've got stocks at bargain basement prices. We do not know that yet, but nevertheless, it was a good day on the markets. Hi, Surabhi.
Hi, Lata. I think the bulls couldn't have asked for a better opening to May with the kind of move that we've had in the markets today. There's plenty to talk about. Let's start with the headlines. Markets start the May contract on a strong note with benchmark indices rallying over 1.7% each. The Clsa increases its India weightage by a percentage point, fueling hopes that FII outflows are finally nearing their end. The Nifty scales 8,300. The Sensex puts on almost 500 points. All sectors end positive. Oil and gas and PSU bank stocks see strong gains.
Mega moves in the retail sector. Kishore Bayani's Future Group buys out Bharti's retail operations for 500 crore rupees in an all-stock deal. The merger will result in amalgamation of 570 retail stores across 243 cities.
There is reason to cheer in the auto sector. The fiscal has started off on a strong note with sales growth across OEMs picking up in April. Maruti registers a solid 30% growth in sales, while Bajaj Auto sees a rise in sales for the first time in 4 months. The stock rallies 7%. The management says urban demand has started picking up.
Well, those were the headlines from the markets, and here are the experts that we have lined up on the show for you. Ramesh Damani, Vibhav Kapoor and Rhythm Desai, all market experts will join in from the sidelines of the Association of Technical Managers, Technical Market Analysts Conclave, the ATMA, with their take on markets and macros. We will also get to the management of Future Group to talk about their big merger plans and, of course, lots of news coming up for you over the next 30 minutes. But first, D Street.
Absolutely, Lata. Let's talk about the kind of day that we've had and what a blitzkrieg. The bulls have finally taken charge of Indian markets and they put on a very impressive show on the first day of the new series. Anuj Singhal is standing by with all the details. Anuj, what a start to the new series.
Well, the old adage is that sell in May and go away. Clearly, this May hasn't started like that. On the first day of May series, big 500-point Sensex rally, 150-point Nifty rally, and big advance decline ratio of about 4:1. In fact, it was a good day. It was broad-based buying. ONGC was the stock that led the market today. Let's talk about the stocks that led the market higher today. And really, it was top contribution from ONGC, which was up about 9%. ITC was up 2.5% and HDFC was up about 3%. Some other prominent Nifty winners included stocks like Reliance, that was up about 3%. Infosys was up 2.5% and as was State Bank of India. Apart from that, auto stocks which delivered their monthly sales also, most of them actually looked quite good. Bajaj Auto was up 7%, Mahindra & Mahindra was up 5% and Hero MotoCorp was up about 2.5%. On the other parameters, in terms of some other Nifty gainers, we had stocks like Cifla that was up 6%, HCL Tech was up 4% and Bharti Airtel was up about 3%. Outside the index, the big sectoral talking point really was retail. We had 2 deals in 2 days, and you had stocks like Aditya Birla, Nuvo, and Pantaloon Fractions both up 12 to 20%, and Future Retail in late trade that was up about 12%. And finally, in the broader market, 3 stocks that stand out. In fact, there were a lot of stocks which were gaining ground, but just 3 of them from the F&O space: Wockhardt, Adani Port and Arvind, all up between 7 to 11%. So strong day. It's a short covering plus some bargain buying. It will be interesting to see if this kind of move can sustain and if we have put a bit of durable bottom in place.
All right. Thanks a lot for that, Anuj. Before we get you more on the markets, the retail space, it's exciting times for the Indian retail sector, and the big players, Future Retail and Bharti Retail, have decided to realign their businesses to try and maximize returns. Let's go across to our Bureau Chief, Sajit Mangat, to make sense of the deal. Sajit, first up, is this a 500 crore deal? Is the 750 crore deal? Tell us the contours.
Well, it's a 500 crore equity deal which includes another 250 crores of convertible which will be done in at a future time. So it's basically a 750 crore all stock deal where the entire assets of Bharti Retail has been sold to Future Retail Group. The entire deal involves a scheme wherein the front end of both the companies get merged and will be eventually known as Future Retail. The back end and the infrastructure would be merged and will be called Future Enterprises. The front end will have a debt of nearly 1200 crores while the back end will have a debt of nearly 3,500 crores. Bharti will not be transferring any debt to Future Retail, and the entire process will take nearly 6 to 9 months before the entire completion happens, and eventually both the companies will be listed on the stock exchange. Bharti will be holding initially 10%, and that stake would go up to 15% in a span of some time. That time detail has not been given to us, but eventually when the entire merger is complete or the demerger and merger process is complete, Future Retail will have a top line of nearly 15,000 crores, and it will be cash positive from year one. So that's some of the details which is coming in from this mega merger, 2 mergers in 2 days.
Absolutely. Well, thanks a lot for that, Sajid. Let's hear out what the Future Group management had to say about the deal.
We are demerging our retail business and merging our retail business with Bharti Retail. And we are creating 2 companies out of our current Future Retail. One is going to be an infra and investment company, and one is going to be a pure retail company. And same thing, Bharti will demerge its infrastructure assets, move into the infrastructure company, and retail assets will remain in the retail company. With this, Bharti Group and the Mittal family will become significant shareholders of our company, will join our board, and be a part of our journey to make retail more exciting in the country.
Okay, that was Mr. Biani after that mega announcement. Well, the other big development from the retail space happened over the weekend, coming in from the Aditya Birla Group. The making of the country's largest retail brand all under one roof nudged up the shares of Aditya Birla Nuovo and Pantaloons in trade today. The Aditya Birla Group has decided to bring its 2 retail brands, including Mudra Garments and Pantaloon, all under a new entity called Aditya Birla Fashion and Retail, which will be listed separately. Pragya Bhardwaj joins us with all the details. Pragya, what's your takeaway?
Well, most of the details are now pretty much digested by the market, which is why you saw a fair bit of a rally on all of those counters. Now, Aditya Birla Group, as you rightly pointed out, has decided to merge 2 of its retail arms into one identity, which will now be called the Aditya Birla Fashion and Retail. This new entity will likely have about 869 stores, so a massive presence across the industry, and 5 million square feet of commercial space. And remember, this will be one of those businesses which has very, very prominent brands listed under its retail business, a business model within the retail space, unlike that we've seen with any other. So not fair to actually compare it to the likes of Shoppers Stop or the other listed entities within this particular space. What we understand is that the combined entity will have a debt of close to about 1,775 odd crores. And, more importantly, the shareholding pattern of Pantaloon, which will become the umbrella brand and house all of the other key brands of Madura Garments, which are, Louis Philippe, some of the names like Van Heusen, etc. All of that will form a part of the Pantaloon retail. So it's, sort of a marrying of the #1 women's wear retailer and the #1 men's wear retailer, all of that coming together under one brand name. The shareholding for that will go up from 9.28 crore shares all the way up to 77 crore shares. Now, the reason we saw a fair bit of a rally on the stock prices of both of those counters, one, let's talk about Aditya Birla Nuovo. What of the investors are saying that this is a big value unlocking exercise. Madura Garments is being valued at roughly about 16 times EBITDA at a market cap of 8,200 odd crores. At the current price of where AB Nuovo is, at least before the rally started, if you account for the 23% stake which AB Nuovo holds in Idea, which would roughly be valued at about 15,000 crores, the residual business that the investors are getting in that in AB Nuovo is practically for free. So the entire finance arm, all of the other cement and ancillary businesses is practically coming for free, which is why you saw that huge rally on the stock price. As far as Pantaloon is concerned, that stock was locked in an upper circuit right from early morning trade. The market cap of that company will now reach about 10,500 crores. If you go by the current market price, assuming about 76 crore shares. The valuations of close to about 7 times on an EBITDA basis could actually set a new benchmark for the industry. And given the fact that, this will be one of those, businesses that will command a sort of scarcity premium, we saw the big, rally as far as the stock price is concerned. So a very creative way to sort of unlock value, especially as far as the shareholders of Aditya Birla Nuvo are concerned. On the back of that big rally seen on all of those counters. Back to you.
All right, Pragya, thanks so much for that. Well, we reached out to Kumaramanglam Birla, chairman of the Aditya Birla Group, yesterday, and he clarified that the company has no plans to restructure the cement business anytime soon.
I've said this in the past very often, and I say it once more, that there is nothing in the offing. There is no plan to restructure cement of Century and merge it into Ultratech, as has been written about a lot by the press. I think it's pure speculation, nothing that is in the offing at all.
Right. Shifting focus to Motown, where we have auto sales numbers for April coming in. Some automakers like Maruti have seen strong growth during the month, while others such as Tata Motors have also seen a mild recovery. And two-wheeler Bajaj as well dazzled with its numbers. Sona Shanoy is here to take us through the details.
Well, thanks for that. The month of April was a mixed bag for the auto sector. So while pockets like passenger vehicles continue to see an improvement this month, two-wheeler sales were sluggish. Also, we've seen some concrete signs of a revival in urban demand this month. However, rural demand continues to be extremely slow because of the erratic monsoons and the lower rural wages. Now, in terms of individual stocks, Maruti was the strongest on the back of very good growth this month. Total sales growth of close to 30% at 1.11 lakh units. It continues to outperform the industry because of good response to its new launches like the Ciaz, the Celerio and the Alto Automatic. Bajaj Auto, after 4 months of falling sales, finally we've seen some respite in terms of sales growth for Bajaj Auto. So total sales were up 1% year on year. The management says that the market share of Bajaj Auto in the domestic motorcycle segment has improved from 15 to 19% because of a good response to the new launches like the CT100 and the Platina Self-Start. Ashok Leyland reported a good commercial vehicle performance. So the total sales were up 43%. Medium and heavy commercial vehicle sales were up 45% odd. Even TVS Motor had a strong double-digit growth, so total sales growth of 14%, while scooter sales were up by about 15 odd percent. The only negatives, as I was mentioning, was that the rural demand continues to weaken. So tractors were under quite a bit of pressure, and you saw that in M&M. While M&M's auto sales grew 1.2%, the tractor sales were down by about 13 odd percent. And Hero MotoCorp as well, it has the highest exposure to the rural market. So Hero MotoCorp saw a total sales drop of around 6.6%. But by and large, there are signs of urban demand revival, and that led to better than expected sales for a lot of companies this month. Back to you.
All right, Sonia, thank you so much for that. Well, for Bajaj Auto, the focus continues to be an increase in market share. Speaking to CNBC TV 18 on the phone line, President of the Business Development, Ravi Kumar, said that the company expects to see a big pickup in the premium category of two-wheelers.
About 400 bips market share growth, which was around 15% a couple of months back, is today standing at close to about 19%. And because domestic was the real pain area for us, if you recollect, export continues to do well. Certainly, end of the year, we should be somewhere around 23%, 24% type of a market share. Three-wheelers in domestic again, last year, in the full year, we did a very good market share improvement from about 50% to 55% in domestic three-wheelers passenger segment.
Right, so good micro data and good for Bajaj and Maruti, but macro data was not so good. India's manufacturing growth engine actually slowed down a bit in April, falling to 51.3 in April from 52.1 in March. The survey found that the total new orders increased at a weaker pace, and as a result, companies reduced the staffing levels and raised the output to a lesser degree. Results of this survey, this is called the PMI survey, also pointed to a weaker improvement in operating conditions across the sector. That's the Purchasing Managers Index for you.
All right, let's move on. Has the market bottomed out after 3 weeks of selling, and what's the long-term outlook for the Lal Street? Here are some expert opinion coming in from the sidelines of the ATMA conclave.
It's the nature of this bull market cycle that it will be driven to an excess and then it will collapse. And once it collapses, it doesn't fall 5%, 10%, it falls 50%, 70%. So you don't want to be holding stocks at that time. You want to be holding cash or an alternative asset class at that time. Now, when do stocks stop out? When do bull markets stop out? Like I alluded earlier, the signs are very clear. You'll find excesses taking place.
I think what also did happen was that because the previous 2, 3 years, 4 years of the previous government were what was called policy inaction completely, so there was a lot of hope also which got generated by the election and the new government coming in. Now, I personally would think that 1 year is still too short a time to say nothing is happening. It's, you know, the government has tried to make changes. It's a slow process. We know India is a very complex country. And therefore, it's, you know, even if it does happen, I think 1 year is too short. Maybe over 3 years, 4 years, the impact of all that could happen.
A lot of the lead indicators to headline economic growth have actually already turned in the last 2 months. If the government spending picks up, which is what I think will happen in the first quarter, I think you will soon start seeing it translate into corporate earnings growth. I think 18 to 20% growth is pretty reasonable, par for the course.
And that puts index earnings at what level?
The index earnings could actually be higher. It basically means that the market, which is currently at maybe 18 times earnings, is trading at maybe 15 times forward.
Real estate stocks, they are perhaps, you know, ahead of the curve right now, but maybe 6 months down the line, 10 months down the line, whenever a final new low is set in them, cyclically over the long-term charts are looking like, and again, minds are biased from the news we read, the refinery stocks that have gone through the roof, and which say at around 220, 30 levels, BPCL was, you know, nobody was thinking of talking about going to a new high, and we Elliott wave guys talked about A, B and C wave coming. Now that has come, we'll thump our chest and tell you that now that the crude has collapsed, because the crude collapse, refineries have a put option inbuilt. The crude chart is now looking like we'll go back to 19, BPCL looks like we'll go back to 230 again. So now those kind of reversals are in there.
That's bullish noises over and above the bull run we saw today. On that note, let's take a break. But coming up, Sudarshan Sukhani will join in for a technical chat. We'll also get your opinion from Govindarajan Chellappa of Jefferies LLC.